and help you pick the right stock at the right time.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah. You're watching Indian Open, and after what was a packed day of news, today might be some semblance of sanity in terms of the pace of news. However, you never know in politics. Let's wait and watch. The markets are not likely to start off on a good note, though. Let's take a look at the headlines and the top newsmakers at this hour. It's a political cliffhanger in Karnataka with BJP and the Congress and JDS combined seeking to form the government in the state. North Korea cancels talks with South Korea and warns the US to think twice about the fate of Donald Trump's meeting with Kim Jong-un as the US and South Korea go ahead with an air defense drill. Brokerage houses take a hard stand on PNB after the lenders report the highest ever loss posted by an Indian bank, cautions against more pain in coming quarters. And it's a busy day on the earnings calendar with Hindalco, Tata Steel and ITC coming out with their quarterly numbers today. Well, you probably have Hindalco and Tata Steel coming out only post-market hours, but ITC could be an interesting one. However, let's start off with the trade setup for the day. Remember, the global markets are already showing their hand. We are not likely to start off on a positive note. Yesterday, we didn't have too many jitters and we ended flattish. In today's session, the world markets have come off. US came off. Asia is following suit. The SGX Nifty is indicating a downtick. And while it may have failed to be a lead indicator in the recent past, I would be really surprised if we don't start off at least 0.5% lower or maybe more. It doesn't look too pretty. And frankly, while there was moderate volatility due to the volatile lead count in the Karnataka elections trade yesterday there was moderate volatility. The interesting thing is the positioning that people are taking. Now, the Nifty OI is down about a couple of percentage points. The Bank Nifty OI is still marginally higher, but if you were parked in the PSU banking space yesterday, you would have been taken to the cleaners. And also, if you've parked in certain large cap names which are not finding favor, you would be crying the way, because look at what's happening to some of the large cap names. They're trading at 52-week lows in certain cases like Tata Motors, the cement names. They've all come off quite rapidly the last few days, weeks. And despite the index currently at 10,800, it's not looking very pretty for a bunch of these names. In fact, if you just look at what happened in the stock-specific OI changes in trade yesterday, very few stocks saw meaningful long build-up. Just Bajaj Finance and Tata Steel, which was extremely active in trade yesterday. But a lot of other stocks, ACC, massive OI build-up despite the fact that it's already trading at 52-week lows. I can understand PC Jewellers and Allahabad Bank. NCC, Ashok Leyland saw about a 7% uptick in short build-up as well. So a clutch of liquid names saw a fair amount of short positioning coming in trade yesterday. And that's the worry, really. I think some of the auto names too are now starting to come under pressure. And that's the stock-specific worry. I think the bigger worry is what's happening to the currency. Look at it. Yesterday, went past the $68 to $1 mark, and it's now become the worst performer in Asia in 2018. Now, that's some telling statistic. And we spoke to Hugh Young earlier, and we'll make you hear a part of that conversation about how does that worry FIIs when it comes to the currency movement as well. The Q4 earnings season, I mean, that's the bigger worry, right? Q4 earnings season is good, but it's not living up to the expectations or the heightened expectations that the market had, and we will not clock in that 10% earnings growth. So whether it's a mirage or whether it picks up, and now all eyes will be on Q1 as to what it does. And Nifty at 10,900, 10,800 odd is well over about 19 times FY earnings expected EPS, which compared to the rest of the Asian pack is not cheap. Keep in mind that we also have a long-term capital gains tax, which some of the other Asian peers don't have too. So relative parlance, index is not looking particularly cheap. So in light of all of this, could there be some downside? Well, most experts suggest that purely on valuation front, there could be something that we could see. However, what are the stocks to watch out for in today's session? That's the key thing. PNB, while the numbers came out just around close of market and there was a bit of a correction already, as we said in the headlines too, brokerages have taken a bit of a hard stand on PNB. let's see what the stock does. We were talking about it all when it nudged the 100 mark and went down to 99. Now it's trading at 85. That's about a 15% downtick from the 3-figure mark, and doesn't seem like the pain is over. Almost all brokerages cut to neutral, cut to reduce, at best maintain hold. The target prices finally are being revised way lower than what the earlier target prices were as well. So if you thought that PNB used to trade an X level, now it's at 85, the pain is over, maybe there's time to buy. Maybe there is. You don't know that, but the sell side doesn't believe so. On the flip side, some numbers. Britannia, the net profit up about 25%, margin expansion seen as well. EBITDA was up about 30 odd percent. I'm sure Agam will talk about this in greater detail in the show, but the numbers looked okay. Very strong numbers, or at least optically fairly strong numbers for Monsanto, Crompton, as well as Endurance Technologies. Typically, Endurance Technologies is done fairly well in terms of its quarterly performances, and this one is not different. So let's see if these stocks tend to react positively. And INEOS Styrolution, and a mixed bag by Shakti Pumps. I think operationally did okay, otherwise was a bit of a mixed bag. Let's wait and watch what happens to these names as well. However, first word, yes, is about PNB, but it's also about what will happen on the political front, because that remains the top story both for general news as well as business news. So today on First Word, the Karnataka Governor is going to be in the limelight for the next few days, not just today, as his decision will decide who gets to form the government in the state. Ira and Shraddha break down PNB's numbers to give us a better picture of the bank's finances and what have brokerages made of it. ITC's food business is expected to make up for subdued volumes in the cigarette business, and a small chat with Hugh Young of Standard Life Aberdeen Asia on why he's willing to pay more for quality stocks in India. But there's never a dull day in Indian politics, and boy, having looked at a few, yesterday was anything but dull, and it's going down to the wire in Karnataka. The BJP's emerged, as we all know, as the single largest party. That Congress has taken a leaf out of BJP's playbook, forming a bit of a post-poll alliance with JDS within hours of counting, which they claim takes them over the halfway mark. Now, all of this is known. What is also known is that both sides have officially claimed right to form the government, and it is now up to the governor to take a final call. Tamanna Inamdar firstly sums up the three options before the governor.
The Karnataka verdict has thrown up a hung assembly, and now it comes down to what decision Governor Vajubhai Vala makes next. Vajubhai Vala has been a BJP politician, and now in the constitutional post of governor, his next decision will decide the fate of the Karnataka government. So what are the options before the governor? In scenario 1, he allows the single largest party to form the next government. This would, of course, be advantage BJP, but they would have to prove their majority on the floor of the House, which would not be an easy task since they are still short of a simple majority. In this case, the Congress is also likely to move courts to counter a decision like this. In scenario 2, the governor could invite the Congress and JDS combined to form the next government. Together, the two parties are well placed with the numbers, but he will also have to consider that this was not a pre-poll alliance. In the third and most unlikely scenario of all, he could call for a re-election if no clear combination emerges. Now, while one cannot predict what the governor will decide, he does have guidelines to work with. The 1998 Sarkaria Commission recommendations have a clear order of preference in which at number 1 is to call a pre-poll alliance, which doesn't exist in this case. At number 2, a single largest party with support of others could be called, and at number 3 in this order of preference, it would be a post-electoral coalition with full support. It is not just the Sarkaria Commission. There is another commission in 2010 which has similar recommendations, where in the first recommendation or the first order of preference is that the group with the largest pre-poll alliance is invited, and then the single largest party with support of others. If he follows these recommendations, he is likely to go with scenario 1, where the BJP is invited to prove its majority. What would also bolster that argument is the SR Bommai case, where guidelines have been set to invite the leader of the party commanding majority in the House or the single largest party. But And this is a big but. Governors in the recent past, after state elections in Goa and Manipur, have chosen to ignore these guidelines and go with a coalition that presented the numbers. In those two cases, it was advantage BJP. So what will Governor Vala choose to do? Well, that is anybody's guess.
You bet, and we discuss both sides of this story and the government formation with Congress spokesperson Salman Soz and BJP spokesperson Sudesh Verma. Both of them would be joining in at 9:30 a.m. today. Well, you can't afford to miss any of these conversations, but I'll be there to talk to them. It just becomes interesting from a market perspective as to what happens, because yesterday's market movement was completely dominated by the leads and the eventual pullback of the BJP tally. So this becomes very, very crucial. Okay, on to the other piece on First Word. Punjab National Bank reported the biggest ever quarterly loss in the history of Indian banking. A large chunk of it can be attributed to the Nirav Modi fraud and RBI's new stress asset norms. Ila Duggal first reports the math behind PNB's record loss.
Those watching the banking sector have become slightly numb to large losses and bad loan ratios. But this one would have shaken you awake. Punjab National Bank reporting the largest ever quarterly loss in Indian banking history, 13,417 crore. Incidentally, Punjab National Bank also held the previous record of the largest quarterly loss, which was at about 5,367 crore. They have, done a one-up on themselves, reporting more than 13,000 crore in losses in the March 2018 quarter. It's important to try and understand what went into that loss, because there were two important factors playing in. One was the Nirav Modi fraud, which had been detected in February, and then there was also the Reserve Bank of India stress asset circular, which had come in earlier this year. So both of those stories played in to PNB's quarterly loss. Their operating loss was at about 447 crore. It was a loss, but a smallish loss. Provisions were extremely high at 20,353 crore, but they had a tax right back of 7,384 crore. To sort of total it all up, you got a net loss of 13,417 crore. It's not clear on account of what they have done this large tax right back, because it is a large tax right back, failing which the losses would have been in the region of about 20,000 crore. We're not clear about that. But this is what the basic P&L looked like. Now, if you look at what has happened on bad loans, their gross NPAs jumped by 86,000 crore. You've seen fresh additions of about 44,274 crore in the quarter. Some part of this is just organic addition to bad loans, because remember, that story has been playing out. On account of the fraud, there are about 7,579 crore that has been added to the gross NPA pile. Some of this would also be direct credit exposure, which may have existed to Nirav Modi, his companies, Mehul Choksey, his companies, so that would be part of this as well. On account of the RBI circular, they have seen 10,237 crore added to gross NPAs, and that is on account of the fact that the RBI had said that those accounts which were being resolved under stressed asset schemes but not concluded would have to be pegged down as NPAs. So that seems to be what has happened there. Now, if you move on and talk a little bit about what has happened as a consequence of that large loss and those large provisions to their capital position, their capital adequacy ratio is at 9.20%. That is well below the Basel III requirement. On the CET1, which is core equity tier 1, they are still marginally above the Basel requirements at 596, but by no means is their capital position comfortable. Will the government chip in? We don't know. Last, the government said that we will not chip in. It will be tough for the bank itself to generate capital to go back to 11% plus capital adequacy ratio. So that is, a core concern at this point in time with the bank. There are other aspects to focus on, and we are trying to give you a sense of what they have done with the fraud amount. So the total fraud amount is now at about 14,347 crore, the bank disclosed. They have provisioned for about 50% of it, which is 7,178 crore. So there is still 50% which requires to be provisioned for, which will happen over the next 3 quarters. The RBI had given them that dispensation. Also, incidentally, they have spread out the provision on mark-to-market losses on their treasury portfolio. So they have taken some of that relief that the regulator had provided them. them. In terms of the fraud amount, what they owe to other banks, 6,586 has already been paid out, and the rest will be paid out in subsequent months once the credit against those LOUs comes due. But they have created liabilities for the remaining amount, which is 6,960 crores. So those are the numbers, just explaining the details behind this large loss. Lots of questions for the management to answer as to what happens from here on. These are just the numbers. How does the bank proceed? But that depends on the management being willing to give that clarity.
Well, that's Ida Duggal's perspective. Shraddha, I'm sure, has one too, and brokerages expectedly too had downgraded PNB and cut their target prices on the stock. Shraddha has put together what they're saying. Shraddha, what do you make of the numbers? What are brokerages saying?
Overall, Neeraj, brokerages have not only cut their target prices by as much as 50-55%, but most of them have also downgraded the stock. In fact, out of the 8, 9, 10 reports that I've seen, none of them actually have a buy rating. Why so? Most of them are expecting PNB to report a net loss in FY19 as well on account of the residual fraud and other provisions that they will have to make. Secondly, analysts opine that given the big drop in the capital adequacy ratio, the bank is in urgent need to raise capital, which will have to be done at lower multiples, and that would again have a constraint in terms of the loan book growth and their regular operations. So both these factors are playing into the downgrades and the higher bearish bets that we are seeing coming in even from analysts. So Nomura has downgraded the stock from neutral to reduce and cut the target price from 115 to 75. They say that the Q4 FY18 loss and FY19 estimated loss would actually lead to a spiral of capital raising at low multiples. You have Edelweiss, which has downgraded it from buy to reduce and cuts the target price from 149 to 70. That's more than half. Edelweiss has said that governance issues, operational challenges, uncertain business prospects, and diluted franchise actually make PNB a dud investment proposition. They have said that you could see some short-term spikes in the stock on account of news flow surrounding capital infusion or some stake sale, but they would rather stay away from the bank due to structural issues. That's the advice coming in. Credit Suisse again downgrade from outperform to neutral, cut the target price from 188 to just 88. They've said that capital depletion will lead to loan book contraction. You have Jefferies, which has maintained a hold but reduced the target price from 110 to 80, again highlighting that the bank is in urgent need of a bailout and that they will be restricted to conduct normal business operations. So Neeraj, bearish bets from brokerages as well.
Yeah, well, interesting. After a while, I'm seeing the price targets on this stock lower than the current price as well. A lot of steep cuts that have come in from across the board, as Shraddha pointed out as well. Thanks, Shraddha, for putting all of that into perspective. Well, that's not all. ITC is the other one in terms of results. Remember, 3 large companies coming out, ITC, Hindalco and Tata Steel, but ITC expected to post a stable fourth quarter. Foods business is expected to drive growth even as cigarette volumes remain subdued. Agam Vakil is standing by with what the street is pricing in. Morning, Agam.
Good morning, Neeraj. We're expecting a steady quarter from ITC this time around. We're expecting about a 7% growth when it comes to its revenues. We could also likely see its EBITDA margins expand to 35.5% against 34.9%, and profit could see an uptick of around 1.6%, but this is largely on account of some certain exceptional items. In terms of the cigarette volumes, it is critical to understand that there has been no GST action in the fourth quarter, and that's the reason why we can expect some stability in prices, thereby stability in volumes, and which is why we're expecting volumes to show a decline of around 4% to a growth of around 1%. So volumes will remain subdued, no doubt, on account of the GST implementation that came earlier in the financial year. That said, moving on, when it comes to the FMCG business, that's FMCG X cigarettes, that's expected to show a robust 15% growth. We'll be watching out for consistency in its profitability, and as trends have suggested over the previous few quarters, that is likely to be the case. We're also expecting an uptick in the hotels business, where we're expecting about 10% growth. The agri business and the paper business, on the other hand, is likely to see some subdued trajectory coming in. But on the whole, we're expecting a decent quarter for ITC. It's largely steady on account of no changes in taxation for cigarettes.
Okay, Agam, we will watch out for this one as well. Thanks for putting that into perspective. The final piece on First Word is from one of the largest investors in the EM pack in India in particular. And valuations remain a concern across the Indian market, according to Hugh Young. He's, of course, from Standard Life Aberdeen, Asia. But he says that he's willing to pay a premium for quality as long as it pays off in the long term. Listening to a small slice of the conversation that I had with him earlier today.
We're not looking for a few quarters because any given quarter can be disappointing, as we know. We're looking ahead 5, 10 years in many cases, and our holding periods for some of them, such as the HDFCs, have been over 20 years that we've held these companies, the Godreges of this world, the Asian Paints. So we do have long-term horizons. We just wish short-term they were a lot cheaper and we'd be even more comfortable holding them.
Interesting. I heard you mention in this network interaction that India has some of the best quality companies. It's exemplified by some of your investments here. One space where you've long held conviction, it came about or was coming apart at the seams last couple of years ago, was IT. Now seems to have found its mojo back, but we are in a completely different world as far as technology goes. Do you think Indian IT has it within itself to come back? And the part 2 of my question is, while the mid-cap names are kind of showing that promise, that's probably not the pocket that you've looked at very actively. You've looked at the larger names. And therefore my question, do you believe large cap IT has the runway of growth for the next 5-6 years or longer?
I think the growth trajectory has changed quite substantially for the Indian IT companies. So in the early stages, and this is going back a few decades, of course, it was exceptionally strong growth that we saw, and then a maturing of the industry. So I think we're in the mature phase where it's become a lot more competitive, a lot more difficult, and it's not obviously long gone when it's just a matter of selling cheap offshore labour, which I mean, it's never quite as simple as that, but it's certainly developed far beyond that. So I think that is definitely reflected in the Indian IT ratings. So the ratings have come down, and we're expecting far more modest growth there. And on your other point of looking deeper in the markets, we do look at deep in the markets. For example, we participated in the Lemon Tree offering, so we do have exposure to the mid-cap and even some of the small-cap area. I think the issue there has also been valuations have been an issue in some of these areas as well. So the valuation issue is not confined to the large caps, it's right across the market in similar types of stock.
My last question is about the political premium that India attracts vis-a-vis some of the other countries. You have probably looked at what's happened in the state of Karnataka. We don't know which party will form the government, but the Bharatiya Janata Party did emerge as the single largest winner in that state. Does all of this augur well for the general elections in 2019? And would investors such as you factor in political stability in India for the next 5-6 years when you're making your investment decisions right now? And is that a big plus?
Well, certainly if India is politically stable for the next 5 to 6 years, yes, that is a big plus. And one of our long-term frustrations with India has been politics and policies, and it is good to see some good policies coming through. So GST, for example, and various other policies that Modi is putting through, I think are good. Although I would say that in many ways corporate India long-term has done well, notwithstanding the politics, not because of politics, but it's done well despite the fact that politics has been not great. So any improvement in the political front, and really that means we're looking at policies that are clear, transparent, and where we understand the rules. I mean, I think that's absolutely important to us. And the Karnataka election is quite interesting. It still shows really the power that Modi still has. I mean, he's had to work pretty hard for it on the ground, but there still is great support for him as an individual. It's extending that support and having the policies behind it and the team behind it that's the most important thing for us.
Well, that's an interesting chat. He's not too he's unfazed by really all that's happening around. We'll use opportunities if they come about, only to strengthen their positioning. In fact, they're waiting, almost waiting for a correction to come in certain markets like India. That's a very important voice, of course, and you'll hear slices of this conversation throughout the day today on Bloomberg Quint Live and on our social media platforms. But that's all that we have on First Word today. A bit later on, of course, we'll talk about politics. We discuss both sides of the Karnataka government formation with Congress spokesperson Salman Soz and BJP spokesperson Sudesh Verma. Also try and get a sense of how will markets react in this intermittent period to this political developments with Gaurav Mehta of Ambit Asset Management. All that later on the show. For now, take a break. Full tilt towards the day's trade on the other side.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर list कर लूँ?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts. कितने plain और simple. Fog scent. प्लेन और सिंपल व्हाइट शर्ट को बना दे स्पेशल और फैशनेबल. फॉग सेंट, न्यू फैशन वेयर फॉर मेन.
What if lucky discoveries could be discovered without luck? What if the secret code to investing was no longer secret? Could the complexities of business not be so complex anymore? Decode, demystify, learn. BQ Learning. Only on Bloomberg Quint.
Welcome back. You're watching Indian Open on Bloomberg Quint. Let's see how the Asian markets are faring at this point of time. Most of the Asian markets are trading with a negative bias. The Hong Kong markets is down 240 points. So Shanghai is down 0.5%. And Nikkei is down almost 0.3%. But the SGX Nifty is indicating a gap down, probably close to the 10,750 mark. So we are almost, more than 200 points lower than the highs that we saw yesterday. So that's the cue that's coming in. But what are the FNO cues indicating? Agam Vakil is standing by. Agam, what are we seeing right now? Yesterday was a mixed day, 100-point gap up, and then it cooled off significantly to the lows of the day. Today, a 75-point gap down. What are the FNO cues indicating? What's the range?
Right, Darshan, we have seen some very small changes when it comes to the futures and options space. Let me just start off with what we have in terms of the Nifty. As you can see, unwinding coming along. But when it comes to the Nifty bank futures, there has been an accumulation of around 2.5% in open interest. That said, when it comes to the key variables, the VIX, understandably so, had cooled off by quite an extent at around down by as much as 7.5% to around 13. This is, of course, after we are done with the big event. But moving in, the Nifty put call ratio has also come down to around 1.59 from around 1.64. What we see the changes in open interest, we have seen unwinding in the substantial accumulation that we saw over the previous few weeks. So the 10,500 and 600 sees substantial unwinding. On the other hand, more writing coming along when it comes to the 10,800 put. And of course, when it comes to calls, well, not too much to speak for. 11,000 call remains the one with the maximum open interest. PC Jeweler moves back into the band. On the other hand, RB Infra moves out. We can expect the increased activity in RB Infra. Three other stocks I'm keeping an eye on today. ACC, we've seen some shorts come in on the account of 11% increase in OI. We're also keeping an eye on several other counters like Allahabad Bank. A lot of weakness coming in along with several other PSU counters as well. Near 10% added in open interest towards shorts. Bajaj Finance, on the other hand, showing some amount of strength. It was also one of the top gainers in the Nifty, up as much as 2%, another 6% added towards open interest. So some mixed cues coming in as far as the futures and options space is concerned as well, not unlike the broader markets, which actually, on a broader sense, have seen some amount of weakness. So some cues that we can keep an eye on as we move into today's day of trade.
Interesting. Thanks a lot for that, Agam. And it's interesting what could happen to some of these stocks as well in trade today. Remember yesterday, with a flat day of trade to Darshan, a lot of stocks saw significant short build-up. We are likely to start off down and substantially down. Very interested to see what happens to a lot of those weaker hands today.
Yeah, today and today quite a few results will come out. I was very surprised to see the reaction on HUL. Despite strong number and strong commentary, the counter managed to close almost flat in trade. It opened gap up, but it cooled off from the highs of the day. Probably should see a downtick in trade today. So that was one of the keys, and I'll watch out for a lot of numbers that came out. PI Industries was a big disappointment, coming in much below estimates. PI Industries also closed flat, so there was no indication of probably someone got to know the results as such. But today the reaction will definitely come. So that's the big stock I want to watch out today.
Wow. Okay. So that and a lot more to watch out for in the session. And let's get in our research team to talk about what could happen in a scenario like this. I don't know, Darshan, do you have a piece to speak about in the research at all, or can I go to the others right now?
You can go if you want.
Okay, let's try and do that with our research team today and try and figure out what are the stocks that you should be watching out for in the session today. A lot of result reactions and some stocks in news, I presume. That's the nature of what will happen to specific stocks in the session today. So Shraddha and Nikki join in to talk about those. Good morning. I'm guessing Nikki will speak about results and Shraddha will speak about stocks in news. Am I correct?
All the stocks and news revolve on earnings today.
Okay, so Shraddha, let's start off with you.
Yeah, so a strong set of numbers coming in from Monsanto India. Revenue growth of 10%, net profit grew by a much sharper 66%, and that's on account of a strong EBITDA level performance. EBITDA up 50%. EBITDA margins have risen from 25% to 34%, so the positive reaction likely there. Also, very strong set of numbers coming in from Endurance Technologies. Revenue growth of 29%, net profit growth of 39%, and EBITDA margins also expanded by about 70 to 80 basis points. On the other hand, like Darshan was saying, very weak set of numbers coming in from PI Industries, missing estimates. Revenue growth came in at a very muted 3%, but the net profit fell by 22%. We're also seeing a large contraction on the EBITDA margin front. Shakti Pumps was another disappointment. Revenues declined by 22%, net profit declined by 20%, but operational performance was more or less in line on account of they managed to do well operationally. JHS, Schwengard Laboratories, you have revenue growth of 38%. Net profit has fallen by 84%. That's largely to do with a tax credit in the base quarter. But otherwise, even on the operational performance level, the growth is much lower than what the revenue or top line growth was. So overall, a weak set of numbers from JHS as well.
Okay, we'll watch out. Endurance seemingly seem very okay. I think they've been delivering good numbers quarter after quarter.
Right.
So let's wait and watch what happens there. So if this was the set of numbers that came out, good and bad, and will react, let's talk about numbers that will come out. We've spoken about ITC in first word. What about the metal names, Nikki, today?
I'm going to start off with Tata Steel. We're expecting a muted quarter year-on-year basis. Sequentially, however, we're expecting a better growth. Revenue is seen flat for the company. We're looking at an EBITDA, which is expected to come down by as much as 16.4% year-on-year basis on consolidated level for the company. Net profit is expected to be at 2,271 as compared to the net loss that we've seen in the corresponding quarter. And the factors actually which go behind the making of Tata Steel numbers, higher strong steel prices are expected to aid the realization growth. However, that is expected to be partially hit or weighed down by the raw material cost, which in turn is expected to percolate down on the operating performance. Two key parameters that we like to keep an eye out will be the standalone EBITDA, which is expected to be around that 15,400 rupees level, expecting an uptick there. And also the European EBITDA per ton, that business is also expected to do well, 27% sequential uptick that we're looking at, to a number of around $90 per ton as compared to nearly $51 per ton that we've seen in the corresponding quarter. Neeraj, if I'm also supposed to talk about Hindalco results, so well, we're expecting again the same set of numbers. Muted YOY, sequentially we are looking some sort of improvement which is expected to come in. The revenue is expected to be up by as much as 3% modest growth. EBITDA, however, is expected to come down, and net profit is expected to decline 7% for this counter. Now, do remember the fact that higher cost of production and the hedges that have been created on the aluminium segment is expected to weigh on the operational performance of the company. Key things that we'll need to keep an eye out will be the outlook on the commodity prices given the global shortage scenario, and also the hedges, the quantum of hedges that have been created on the aluminium business.
Interesting. So watch out for the metal names today, watch out for some of these other companies as well, and watch out for PNB, Shraddha. I can't take my eyes off that. And because it came out at the fag end of the market closing, there could be some follow-up reaction maybe expected today as well.
You know, Neeraj, just also going to point out the difference between how the markets are reacting, have and will react to PSU banks reporting net losses, and then you had the private corporate banks reacting to losses. That is balance sheet cleanup. This is just a net loss. The difference, of course, lies in the capital adequacy that both sets of banks have, but yes, a big reaction likely on PNB.
Yeah, you know, I was talking to one of the market guys, I'm forgetting who, yesterday, about whether the markets would now continue to give an excessive premium to the private banks versus the PSU banks. Also keeping in mind that the farm loan waiver phenomenon seems to be working great in elections. We have 3 more coming up. You would think that the elections won't go through without a poll promise of a farm loan waiver, and that probably impacts the PSU banks even further.
It does, PSU banks, because they have a higher share of agri loans. But I do want to point out that agri already is under stress, and you had banks like HDFC, RBL also pointing that out. So this could worsen it for PSU banks probably.
Okay, let's wait and watch. Shraddha, Nikki, thanks so much, both of you, for joining in and giving us those perspectives. Well, interesting names there out there. Darshan, I don't know how closely you've looked at Endurance, because that came out with a very good set of numbers. But I just want to draw your attention to Lupin, because I know you're going to have a chat with Ramesh Swaminathan. And those numbers came out in this whole melee of, you know, the election, Karnataka elections. We kind of lost out on what the key details were. Were you able to digest how the numbers looked and what it would mean for Lupin going ahead?
Yeah, so basically, if you're looking at Lupin, if you see the fourth quarter numbers, they came in line with estimates. But, you know, I think, you know, post you know, the numbers, there was this press conference. The management tried to put up a brave phrase. They decided to give some strong commentary. But in the analyst conference when most details came out, not the best, you know, because the guidance that they're giving is that, you know, R&D will be flat. And if you see this time around also, R&D is low, and that is why they were able to get their margins much higher this time around. The second point is a single-digit growth that they are looking at in this financial year. Apart from it, they believe that there could be price correction that could happen on some of the drugs, but they believe that the worst of the price erosion is over. So I went through most of it. The working capital didn't look very good. So it's already beaten down. It's down almost. It's become 1/3 of what it was at one point of time. But nevertheless, the management commentary wasn't the most encouraging. Obviously, the management will come out. I think Gavis is a big hole. They did a big, close to $1 billion acquisition. Somehow it hasn't worked out at all totally for them. So that's something that we need to hear from the management. Endurance, obviously, you were talking about 30% top line growth, 40% bottom line growth, decent margin expansion. So Auto Ank as a package doing well. I just want to point out one company, and probably this will react very negatively, Shakti Pumps. It's been at a fresh 52-week high, and I was really surprised seeing the numbers. There was a net profit is down almost 20%, revenues are down 22%. Even though cost controls have helped them maintain their EBITDA, I don't think the street would like this number that has come out on Shakti Pumps. It's a really bad number. So probably, and Counter has run up significantly. So I think this could be, along with PI Industries, this could be one other stock that you need to watch out for.
Oops, PI Industries. Even I missed marking out PI Industries in the morning in trade setup, but clearly from the way the numbers have appeared, it might be a terrible or tough day for PI Industries.
Yeah, and I think most people must have missed, because I think the numbers came out at almost 11:30 at night. So, so I think the street may take notice of PI Industries now, because the numbers came in really late. So in the evening, once we do all the data collection, that time PI Industries was not there.
Yeah, and it's interesting because this one was considered to be one of the blue chip names, something that the street loved quite a bit. I think ever since that dichotomy with the global partners came about, and then some competition coming in, while the management has maintained quarter after quarter that they'll try and do something meaningful in the next quarter or in the next year, somehow the last 6 or 8 odd quarters, PI Industries has failed to do so. If you bring up a 2-year chart, if I'm not wrong, or what, yeah, I think it would be flattish on a 2-year basis from 700 to 800. Yeah, but look at the 2-year chart, about a 38% gain. So last 1.5 years, it's been absolutely flat, and that's a fairly long time, frankly, for a company which is not really a large cap, just about a budding mid cap, to be honest. Let's wait and watch what happens there. The other one, of course, which was very active in trade yesterday, just before I go to Yatin on the brokerage notes, was V-Mart Retail. Fairly strong day throughout the trading session, ending at close to life highs, actually ending at life highs. So this one will be interesting to watch out for as well. But before we move any further and get in our guests, I think it's also important to take note of what the top brokerages have mentioned today. Remember, we already told you about PNB, but Yatin Mota joins in with a clutch of other important brokerage notes that have come out today. Good morning, Yatin.
Good morning, Neeraj. Two important stocks to watch out for. One will be Lupin, and the other one will be PNB. Now, if you look at PNB, Credit Suisse has downgraded the stock, and they have put a target price of 88 rupees from the previous target price of 188. So clearly, at this point in time, we have a big downgrade coming in on, PNB. Of course, the kind of asset quality that the company has posted, that will clearly impact the overall earnings moving forward. They believe that the capital depletion will lead to the loan book contraction, and probably that will impact the overall earnings. So that is the logic as far as the PNB downgrade to neutral is concerned for Credit Suisse. On the other hand, we have Lupin. They also reported a weak set of numbers. In fact, the management commentary was also on the weaker side. They expect a 50 to 100 basis points margin decline on a year-on-year basis for FY19, and not only that, they expect a single-digit growth on the revenues, and probably that is the reason why the street is not really excited with the earnings of Lupin. We have Credit Suisse, which has a price target of 770 on the stock, very close to the current market price, I must say. They say that FY19 outlook for Japan and US, that is weak from the management, and also the outlook for margins remains weak. They expect single-digit growth as far as FY19 sales are concerned, and probably that is the reason why there is no material revision, in the overall outlook for pharmaceutical stocks, especially Lupin, from the house of Credit Suisse.
Okay, we'll watch out for both of these. Yatin, thanks for putting that into perspective. Well, a couple of minutes early, but let's dwell in on the technicals and the derivative positions, because I think that's very, very important in a scenario like this today. Chandan Taparia, Associate Vice President at Motilal Oswal Securities, joins us right now on the show with his thoughts on what's happening on the derivative front. Chandan, very good morning and many thanks for joining in. What have you made of the trade the last maybe 6 or 7 sessions, Chandan? The market breadth has been terrible, and yesterday, after starting off at a high, we came off ending flat, likely to start off slightly negatively today. How does all of that augur for the near term?
Yes, very good morning. Talking about the advanced decline first, that is negative from last couple of days or couple of weeks. And Nifty Midcap Index is down by around 6.5 to 7% in this entire month. So clearly the selective mid-cap stocks are continuously witnessing selling pressure, and couple of heavyweights name are continuously moving upwards to lift the index to higher side. Talking about the broader market as per se, we have seen the movement of around 983 points in last 7 to 8 weeks. Market has seen the V-shaped recovery and supports are gradually moving on upside. We have seen the formation of higher highs, higher lows on the weekly chart, and recently it has given the consolidation breakout of the zone between 10,600 to 10,785 levels, and yesterday it managed to hold. That's why we have seen a fresh move towards 10,929. Now if it again slips below 10,785, then we may consolidate in between 10,680 to 10,780, 10,900 now will be the upper band of the zone as per the option data. So some volatility could again emerge in the market, but base of the market is shifting on the higher side. So again buying interest could emerge. Looking at the volatility index, that was down by around 7% on last trading session, now near to 13.75, and the put call ratio is comparatively moving on higher side. So rising put call ratio with decline in the volatility and the shift in the support for the index indicates that again buying interest could emerge. So as of now some dip could be seen as holding below 10,785 could see some correction towards 10,725, but again expecting market to emerge as buying interest. So movement could be between 10,680 to 10,900 zone. For intraday traders, they can open their short position, but those who are looking for couple of days can continue to be with their long position in the market with the overall trend.
Okay, Chandan, what are the strategies that you're recommending?
See, for intraday, those who are looking for intraday point of view, the selling can be emerged. So they can initiate the short position if sustains below 10,785 for downside move towards 10,725, 10,680. But if it opens gap down, then there is no meaning for shorting. Then in that scenario, we have to take the buying opportunity with support of 10,680. So both the scenario can be worked. Buy on decline and opening near to 10,785 could emerge as a selling opportunity.
Okay. Chandan, just before we get in your stock specific strategies, just a word on if you would take any trades on either the PSU Bank Index or the PSU banking stocks individually, because those got clobbered in trade yesterday.
Talking about the PSU Bank, it is continuously making lower top, lower bottom formation on the monthly and the weekly chart. We have seen no major movement even after the rally of around 8-9% in the broader market, or in fact the bank nifty was leading because of the buying interest in selective private bank. So weakness could continue in the PSU banks, and name like PNB, Bank of India, Bank of Baroda, Union Bank could continue to witness selling pressure. So first talking about the PSU, Nifty PSU Bank, it is hurdle near to 2850 kind of zone, and it has potential to even test the recent low near to 2700 zone. Talking about the sector wise or the stock wise movement, we have negative view on the selective PSU Bank and recommending to sell Bank of India. The stock has broken immediate support. Every small bounce back is being sold. So one can sell with a stop loss of 100 and expecting it to go down and test towards 91 kind of level.
Okay, okay, so that's of course the call that's coming on some of the specific PSU banking names as well. You know, yesterday's session was also marked by what was happening to the metal names, particularly Tata Steel in the last few minutes of trade. Now, a lot of reasons, of course, which Nikki had highlighted yesterday as well as to why is it that Tata Steel could be doing what it is doing ahead of the numbers yesterday. There was a strong show by ArcelorMittal, which fueled hope of better European business performance. The potential JV partner ThyssenKrupp reported a jump in second quarter earnings as well as profits more than doubled. NCLT, of course, approved Tata Steel's bid for Bhushan Steel. So all of these factors led to Tata Steel moving up yesterday. I mean, forget what it's done over the last 3 months, but in yesterday's session, Tata Steel was very, very active, and it makes it for an interesting move or in today's session as well. Chandan, do you track Tata Steel individually as a trade prospect, and if so, what would you advise to some of our viewers today?
Yeah, we are closely tracking Tata Steel, and in fact we are witnessing buying interest and recommending from last 3-4 trading session. After a long consolidation, the stock has finally surpassed its 50-day exponential moving average, and we have seen put writing at 600, 620 strike. Yesterday 620 call was quite active. It moved from 14 rupees to 29.30 rupees. Sharp jump was seen in the option activity as well. It has also given the consolidation breakout with rising trading volume and the open interest activity. So that indicates that some positive strength could be seen. And if I look at the mechanical indicators, it's completed its 14 candle upswing. So some momentum could be seen, and the other name like Tata Steel, JSW Steel are showing some sign of strength in the momentum. So as of now, if chart is concerned, I'm expecting it to continue to hold on the buying side. It has support near to 615, while on upside it has potential to move towards 638, 640. But one has to look that results are there for Tata Steel and JSW Steel, and because of that some volatility could be seen. But as of now, the price pattern is clearly positive. One can continue to be with 620 call to trade the upside moment of the counter.
Okay, Bhavin Mehta, Vice President and Derivative Strategist at Dolat Capital, also joins us on the show. Bhavin, firstly, your view on the Nifty and the Bank Nifty, any trade there that you can recommend?
Okay, markets are going to start the day on a negative note. Definitely the way markets behaved yesterday, and over a couple of trading sessions, we have seen good amount of divergence between the mid cap and small cap indices as compared to Nifty 50. My view will be negative, especially if Nifty breaks below 10,750. So as of now, what we are recommending to clients is selling 10,800 call, which is current. Yesterday it was quoting somewhere around level of 110. Stop loss should be placed around 125 on the downside. Stock should, the call should ideally move closer to level of 65. So that is the call on the Nifty. As far as Bank Nifty is concerned, we have not seen major reversal on the Bank Nifty. However, the way ICICI Bank has witnessed a good amount of consolidation over last 4 trading sessions, it should be that stock should be on the radar.
Sorry, Bhavin, missed out on what you were saying.
Yeah, so for Nifty, we are recommending selling 10,800 call, which is quoting somewhere around 110. Definitely with gap down opening on the market, it will start on a lower note. However, anticipating it to move closer to level of 60. Stop loss for the same should be placed around level of 125. At the same time, ICICI Bank, consolidating in a very narrow range. Bank Nifty has not seen any kind of reversal so far. So definitely for Bank Nifty to reverse, it needs to break crucial levels on the downside, which is close to about 26,200. Any break below that will be very negative for Bank Nifty.
Okay. Any stock specific recommendations, Bhavin?
Stock specifically, M&M Finance is a sell stock after a good amount of consolidation. Has given a negative breakdown day before yesterday. Recommending to sell the stock around 485. Stop loss should be close to about 495. Target on the downside is about 450.
Okay, we just hold on, guys. We are going to a special segment, Bloomberg Edge, where Jayesh Kilnani tells us about a pattern. Oh, I think there seems to be some issue. So we wanted to talk about it. Is Jayesh ready? So then we can go to him. But apart from it, if Jayesh is not ready, let's just go across to Gaurav Shah. He joins us on the line. Gaurav, thanks for joining in. What did you make of some of the numbers that came out yesterday, especially Lupin and PI Industries?
Morning, Darshan, to you and to all of you all. Both Lupin as well as PI Industries, as disclosure before I comment on the numbers, we maintain a positive call. Though Lupin has been, underperformer for a very long time. In fact, more than what we had estimated. And yesterday's numbers and commentary, possibly somewhere it gives you a little bit of a ray of hope. And I hope that that hope really materializes in terms of earnings improving and issues that are, bothering the company getting resolved. For PI Industries, specialty chemicals has been one particular sector which has been an interest for us for a very long time. And my sense is that launches going forward would also have much more positive impact. One more number that was out yesterday, which actually impressed us to a great extent, is the CG Consumer, company's number, much above what our estimates are. And I think newer launches in terms of products in different categories will enable the company to gather much more momentum in terms of market share and improve the earnings. So we remain positive on all the 3 names, but Lupin, I think if you're invested, you need at least a 2-year plus time horizon, given the issues that the company has to deal with.
Okay. What did you make of the numbers from a bunch of other mid-sized companies, Gaurav? By the way, good morning and really many thanks for joining in on such a short notice. But what did you make of some of the numbers that came out, particularly PI Industries, came out late in the night? I don't know if you got a chance to see them, but margins have come off. The top line, bottom line isn't looking impressive at all. Have you looked at the numbers?
I've actually, morning news to you as well, and you know, there are times when you have to burn the midnight oil in terms of numbers unfolding. It's a rather unfortunate situation for people like you and me who have been tracking the market for a very long time. So yes, I think there's slight bit of miss, but nothing really concerning in terms of huge negativity. I would view it as one-off quarters, and given the fact that you know, the possibility of opportunities opening up and business scaling to a little bit more higher level, we maintain a positive stance. And all these, you know, specialty chemicals, agrochemicals, which complement certain sectors, has thrown in visibility. So yes, your downside could be there this morning when the stock opens up for trade. And I think sub 800 level would be a great comfort zone to get into the stock afresh, or even add to it in case if you got it at elevated levels. I don't think you should possibly see much more downside from there on. Expect recovery in the earnings in the quarters to come.
Okay, interesting. You know, we want to take a view on some of the IT names as well, because the rupee becomes an important determinant, at least of sentiment, if not fundamentals. Now, before we go to Gaurav Shah on that, let's get up Jayesh Khilnani, who today on Bloomberg is joining us with well, a view on what the terminal believes the currencies could do in the near term. Jayesh?
Morning, Neeraj. So I believe that the dollar rupee, you know, may be turning a corner because the chameleon indicator that has in fact reached the highest level that it theoretically can. Now, first let's have a look at how the chameleon oscillator actually works. As the name suggests, you know, it changes color based on three parameters: the Bollinger Band, the RSI, and the stochastic. So depending on whether these three indicators are overbought or oversold, it gives a value to the chameleon indicator, which theoretically varies from -6 to +6. So -6 and +6 are the extreme values that it can go at. And you know what it indicates is that bright red is indicative of overbought positions, and bright green is indicative of oversold positions. Now what we have on the chart is the bright red indicator. The bottom panel, you can see that this has in fact come to the highest level, which is +6, which means that all of the indicators are overbought, indicating that, you know, there could be further, the price could come down, which means that the rupee could appreciate going forward. And it has worked well in the past, because whenever you see the level of 6 over here in September, this appreciation of the rupee was about 2% against the dollar. And once again, you know, late in 2016, this move was a 2% appreciation for the dollar rupee. So, you know, once again, we are at the same junction. So as per the indicator, can expect some bit of appreciation for the rupee.
Okay, Jayesh, we'll certainly watch out for that. Gaurav, any view on the IT stocks? The Bloomberg terminal is indicating that there could be potential appreciation for the rupee going ahead. Anything that you like in the IT space? Could be a large cap, could be a mid cap, an overall view on the space?
So, Darshan, we have close to about 5 to 7 names, if I recollect right. Starting with TCS, Infosys, HCL Tech, Tech Mahindra, followed by Science Limited, NIT Technologies, Sun System, Mindtree. And as Jayesh was mentioning, our view is also in the similar line, that possibly see some more impact on the rupee in terms of appreciation. And there is also a slight bit of indication that some dollar supply would have possibly happened by the Bank of India in the markets as well. But then to be very honest,
can't quite make what Gaurav Shah is saying, but I believe he's got an appointment lined up, so we have to thank him. So Gaurav, take a moment to thank you for joining in today. Unfortunately, we couldn't make the best of your last answer. The line is patchy, but really appreciate you taking the time and joining us today this morning. That's Gaurav Shah of Geojit. Unfortunately, couldn't get his answer on the currency related moves on Indian IT space, but maybe Chandan has some thoughts there. Chandan, large cap IT seems to be in a trending move the last few days, but anything that has caught your eye, large cap or mid cap IT, any stock there?
Yes, IT stocks are on radar, and IT stocks has been consolidating, especially I'm talking about the Nifty IT index, has been consolidating in a range from last 8 trading session. It has seen the multiple support near 13,300 zone and now at the verge of the consolidation breakout after the decline of last 2 to 3 weeks. Major trend is positive and the recent consolidation is giving the fresh signal for buying interest to emerge. So that's why expecting selective IT stocks to outperform and to move on upside. So that's why we have selected to buy on TCS. This stock has given a breakout or at the verge of the breakout from its pole and pennant pattern, which has the bullish implication. It is trading above all the moving averages. Major trend of the counter is positive and recent price setup is giving the fresh opportunity to hit the new lifetime high. So recommending to buy on a small decline with a stop loss of 34.10, and this stock has potential to test the lifetime high of 35.60 in just couple of trading sessions.
Okay, Bhavin, very quickly, we have half a minute for the opening. Any view on Lupin?
Lupin, our view continues to remain negative, especially if stock moves below 730 level, likely to be very negative for the stock. On the downside, levels somewhere around 660 to 680 can be tested in very short period of time.
Okay. Okay, 15 seconds to go for the markets to kickstart, the pre-open rates at least to come in. The rest of the Asian pack has shown its hand. Not a positive start anticipated. There's ZX Nifty 2 indicating a start which will be down, and the rupee will be a key determinant to watch out for as well. Yesterday, still below the 68 mark. We'll watch for what happens today. But this is how the markets are starting all over the place. Doubt we'll have the 0.25% green that the Sensex is showing. More likely that we'll have a red, but maybe not a 1.5% red that the Nifty is showing either. So let these rates settle down a bit. Just wanting to know what well, okay, ICICI Bank has the down large 9% downtick, which is altering the trade on the Nifty. Ignore that for the time being. Ahead of the numbers, ITC starting off or likely to start off marginally soft. Let's talk about the newsmakers, PNB, and see whether there's a follow-up to the moves that happened yesterday. Slam dunk, really. Don't know if it will be a 10% downtick. Maybe just some bit of downtick that could come about. Darshan was speaking about PI Industries, want to bring that one up. And let's see what that is doing in the session. Well, not so much right now. Let's wait and watch if it corrects further. And before I hand it over to Darshan, just want to mark the currency and see what that is doing in the session today. Yesterday, about 68.10 or thereabouts. The rupee should come up on your screen. 68.11. So flattish right now, but a bulk of the damage was done yesterday. For now, might be a flattish start for the rupee.
So the metal pack has opened well. Hindalco, Coal India, Tata Steel, all of them are doing well currently in the pre-open session, so that is something that you need to watch out for. NTPC surprisingly is up over 2%, so that is interesting in trade. Apart from it, the IT companies continue to do well. So Tech Mahindra, Infosys are in the green. I don't think this will be there, but HUL is showing a downtick of 3.5% currently. So let's pull up HUL. So that's down 3.5%. iShares, the private sector banks, ICICI, Kotak are down in trade. Pharma is seeing a little bit of selling. Sun Pharma and Cipla were the ones I saw on the negative side, and Sun Pharma has been taken to the cleaners of late. There's no major news that has come in, but let's pull up Lupin. Lupin came out with numbers yesterday, post the management commentary. It's trading flat in trades. Some of the numbers that came out after marketers and which wanted to point. So Monsanto India was very good. Let's see whether Monsanto has reacted positively in the pre-open session. It's up 1%. Endurance Tech probably will have started with a positive bias, given the fact the numbers were strong. Yes, up 5%. And INEOS Styrolution was the other one that came out with a fairly decent set of numbers. So INEOS, if we can pull that up, we can have that on the screen. Britannia and Crompton Greaves Consumer. These were the two counters that came out with numbers after marketers. Britannia, not the best of numbers. It was totally in line. And Crompton Greaves Consumer, I think a lot of positive brokerage news have come out. Shakti Pumps is another counter that I want to bring up, given the fact that the numbers that it posted, not the best of numbers. Shakti starts down almost 2%. So that's the general trend that we're seeing, Neeraj, at this point of time. Let's see if we can find something on the broader market. Can you spot something?
Yeah, well, I would reckon that ADAG right out there, Reliance Communication, the NCLT inclusion might not augur well. I remember a lot of news flow yesterday about how the deal with Rel Jio might also find some problems. No surprise that the Reliance Communication is doing what it is doing. For a stock that really went up about from these levels all the way to maybe 25-30, this has been a return to ground, so to say. MRPL has some downticks, but maybe Darshan has a point. ADAG as a pack might not be doing all that well. So Reliance Naval should come up on your screen. Maybe Reliance Nippon Asset Management, probably the whitest knight out of those slightly troubled names. RNAM may be okay, yeah, 248 or 251, so in and around that listing price or issue price. But some of the others are certainly facing the brunt of selling pressure today. Allahabad Bank, by the way, another 5.5% down. So amongst PSU banks, while we talk about PNB, Allahabad Bank hasn't had a pretty last few days, continues to correct almost every single day. Indiabulls Real Estate is showing an uptick 5.5%.
Yeah, but it's corrected significantly from the recent highs. Indiabulls Real Estate, I've been tracking for a while. It just hovers from that 185 level to 220, 230 level. So there's no news as such. It just keeps on hovering around that level. So that's the view that's coming in on Indiabulls Real Estate. Let's ask a technical guys. Chandan, do you have a view on Indiabulls Real Estate?
Yeah, we don't track this stock, but if technical is concerned, the stock has got stuck in a range. Recently failed to hold beyond 220 zone and slipped toward 185 levels. Most of the time it turns from 175. So again, if it comes near to that level, one can put stop near to 168 to again play the bounce back. But overall, if you look at the price pattern, that is just consolidating in broader trading range.
Interested. Bhavin, do you have a view on Indiabulls Real Estate?
Indiabulls Real Estate, once it is able to break past 210 levels, the view will be extremely positive, especially move closer to 240 is very much possible. However, till that time, as Chandan has rightly pointed out, stock can witness good amount of consolidation between 210 to 180.
Okay. Couple of these stocks which have been active, I want to ask you guys to give us a trade on what will happen to Tata, or rather Reliance Communication. It's a difficult one to call, but on the large cap space, after a series of really good days, and even yesterday's session was fairly good for the private banks, today seems to be a day when they might just have a small chink in their armor. Bhavin, from the large cap private sector banks, corporate facing and retail facing, so ICICI, Kotak, etc., do any of these charts merit a trade for the intraday session today, or maybe a small term positional trade?
Kotak Bank is extremely well placed as of now. Stock continues to witness a good amount of accumulation over last couple of trading sessions. So I believe that any downtick probably going forward will be a good long trade for the stock. On the upside, there is high probability that stock will move closer to 1350 to 1380 range. Clearly no signs of weakness in this particular trade. On the other hand, ICICI Bank yesterday witnessed good amount of option activity. In fact, 300 strike call became suddenly very active with good amount of addition. So that stock should be kept on radar, especially if it breaks level of 300 today. As you have pointed out, that pre-opening is showing a downtick, opening closer to 295. So if it breaks 300 level, can be a concern with stop loss of 315. One can look to probably short this particular counter.
Okay, Neeraj, I think we missed the news. Neeraj, I think we missed the news on Indiabulls Real Estate. I think it came at 11 o'clock in the night. So there's a board meeting that's happening or day after tomorrow on the 18th, where they will consider a buyback of shares. So that's probably one of the reasons why Indiabulls Real Estate is active in trade. But Deven Choksey of KRChoksey joins us on the show. Good morning, Deven. The entire scenario that played out yesterday in terms of Karnataka, there's still no clarity. And the market seems to be scared because of that. What's the best case scenario now? How important will be the verdict of Karnataka on the market sentiment?
Yeah, Darshan, good morning. Obviously, I think the market wants clarity, and probably I think as we saw in the early part of the day yesterday, moment they started getting the signal that BJP is likely to be single largest party to form the government in Karnataka, the market gave thumbs up to it, and we saw a rally of around 400 plus points on Sensex. I guess I think the market wants clarity, and why not? In the important aspect is that I think if the state and the center have got some uniformity in priorities and implementation of the policies of the country, probably the country could move much faster. Currently the situation in the country is one of a distrust among I think the center and the state, wherein I think the state would follow their own line of thinking and the center would have the different way to take the country forward. I guess I think the market is basically wanting to have this particular clarity that all the states and the center forms the uniformity in the policy through a common government, and that's where I think the market wants to see the clarity. If that clarity is not coming in, I guess I think the market would languish, though I would agree that I think after a while this particular situation would be taken care of in whichever way in which the equation gets formed. But I would think that the clarity on the part of BJP ruled government coming into Karnataka would definitely give market a major amount of direction and probably the clarity for going forward.
Okay, let's wait and watch what happens there. Deven, the largest loss by a PSU bank, or for the matter a bank, in the history, and that doesn't augur well. I mean, after a while I've seen some steep cuts in a stock which has already corrected quite a bit. Safe to say that retail investors or investors by and large shouldn't go out and try and catch a falling knife in the form of PNB?
Neeraj, I think I have been always maintaining this particular view that public sector banks are not going to be showing any different performance even if you provide them the lifeline in form of money. The reason being very simple, that their management clarity is not forthcoming. You have every 3 years management change taking place, including the top management at the bank level, which is fundamentally against the rule of lending business. In the lending business, I think you must know your borrower well. As a result, I think you must continue your management also in place. Here is a situation in public sector bank from last so many decades. I think now we are seeing that public sector bank keeps on rotating their management from one end to another end, and as a result of which there is a disconnect between the borrower and the lender. Till the time I think this situation gets corrected, I would not have any confidence in buying any of the public sector bank, even though they may do some kind of repairing of the balance sheet, some kind of I think consolidation process, etc. You are talking about PNB, some of the smaller banks, Allahabad banks, Dena Bank, all of these banks have been told not to lend further. I think what does it indicate? It suggests that I think the books are in a precarious situation at this point of time. So honestly, I think not to give any threatened views on this subject, but I feel that the investors should be extremely careful about investing into this kind of a bank, because there is no ownership of this activity per se. That is what is most disappointing.
Okay, interesting. Let's tell you all that you need to know. They won't stay on, so much more to talk about, but let's minutes away from market open, so let's tell you all that you need to know to stay ahead in the session today. The street will be watching out for Hindalco, ITC, Tata Steel, JSW Steel and TVS Motors as they report their fourth quarter results today.
On the earnings that were reported yesterday, Monsanto, Endurance Tech and Ineos Styrolution reported strong numbers.
While Clarion Chemicals, Shakti Pumps, JHS Swendgard Laboratories and PI Industries report a weak quarter.
The lot that met the street estimates included Britannia and Crompton Greaves, with Britannia reporting a double-digit volume growth.
In terms of F&O cues, PC Jewelers is back in the F&O ban, while IRB Infra comes out of the F&O ban.
And on the brokerage radar, Credit Suisse and Nomura downgrade Punjab National Bank after the state-run bank reports a weak March quarter. Deven, any view on Britannia? The numbers came out yesterday. Not the best of numbers, just met what the street was anticipating. What do you make of the valuations? Have valuations run up significantly for these FMCG companies? Deven, that was for you.
Sorry, I think it wasn't Britannia, but I didn't understand the first part of the question.
Yeah, what did you make of Britannia numbers? They were pretty much in line with what was estimated. Are valuations now justified?
See, I think on one side the valuations are expensive and they will remain expensive in this kind of a company. They are more or less, I think, a 10,000 crore company now. And as we see the strategy of Britannia going forward, they are basically talking of serving 4 meals in a day. and that's the proposition that they are bringing up. So a significant amount of investment is going on the food R&D side, which will probably transform this company big time, as I see it, I think, going forward. The valuation probably is on that expectation that this company is changing and changing very fast, I think, on the product side, product launches side. At the same time, I think the larger thrust has been given on the distribution side of the business, where the margins are. So if they efficiently distribute, I think, all the products that they have in the pipeline and coming up in the future, I think they would have a larger business and the margin to talk about. Do agree that I think at the current valuation, the stock remains expensive. However, if you look at the strategy that the company is planning to implement, probably I think it's an interesting strategy coming up. When to buy, at what level, I think would be a little early call at this point of time, but I am keeping a close eye on it. The stock remains interestingly positioned, I must say that.
Okay, Vinit, just a minute to open. Chandan, anything that looks good very quickly?
Continue to bullish on selective IT counter. However, broader market and selective banking stocks likely to be under pressure. So recommended sell on Bank India, PNB and other PSU banks are likely to be under pressure. Only buy side as of now is TCS, where I'll go for buy on decline because of the positive price pattern, but I'm looking to test the new lifetime high territory.
Bhavin, your top call for the day today?
Yeah, positive on ONGC stock, though continues to trade in a range, seems like a safe bet in current market condition. Currently around 186, target price 192, stop loss 175. And from IT back, Infosys can be kept on our radar, especially if stock is able to break past 1200. I am expecting a strong move closer to 1235, 1240 on upside. At the same time, downside stop loss should be kept around level of 1170.
Okay, so IT features right up there in the scheme of things of both our experts, and this is how the markets are starting off today. Expect a start in the red, about 0.5% lower. The Nifty Bank about 200 points lower, so it started off on a weak footing on expected lines. Though mind you, the mid caps and the small caps too would have come off. Maybe the small caps not so much, not so much. But the mid cap index down about 0.5%. Pull up the heat map, fair degree of red I would presume, very little green I would presume. Again, very little green. Lupin marginally there, but virtually no gainers, because a 0.5% gain is hardly a gain. Look at the losers: banks, Reliance Industries, consumption names like Titan. So it's all across the board. No single big loser, but a clutch of names coming off, and the Nifty Bank clearly under pressure there by virtue of what's happening to ICICI, Axis and State Bank of India. But Reliance Industries too down about 1%, 1.09% down. So that's not having a good day. So lack of gainers, and banks and Reliance amongst the heavyweights which are losing out, which is putting pressure on the indices. The start of PNB though amongst the stocks to monitor today, and PNB would be the top draw by virtue of the losses that it has and how brokerages have reacted. 8% down for brokerages after a 3.5 or a 4.5% reaction yesterday itself. So 78 or 79 is where PNB is starting off. Not a good start, and not that one was expected. Let's look at some of the stocks in which maybe good moves were expected. Fairly strong numbers by Monsanto, Crompton, as well as Endurance Technologies, though none of these have a big bang start, just about 1.5%. Let's see if the stocks which came out with bad numbers have reacted negatively. I'm sure Shakti Pumps had. Darshan would have more thoughts here, but Shakti Pumps, yes, 7.5% down, and PI2 down about 2.5%. Darshan, what's catching your eye?
Among the mid caps, India Bulls Real Estate, because of the buyback that they have announced, is up almost 6%, so back close to the 200 levels. JBF Industries is locked on upper circuit. Cyient has been doing well. Endurance Tech came out with a strong set of numbers, so Endurance is doing well. Godrej Properties, Emphasis, both of them doing well. On the back of numbers, Monsanto has been doing well. Ingersoll Rand continues its good run. It's at almost 800, 900 levels, so there is enough traction that's going on. PNB down 10%, so that's the big negative that's coming in. And Reliance Communication is down another 7% in trade, so that is down in trade. There is Avanti Feed, surprisingly, is down almost 4%, and the ADAG pack, Reliance Naval, Reliance Communication, most of the ADAG packs are down in trade. So that's the general trend that we're getting currently.
Just looking at the Nifty 50 names, and Tata Steel continues on its merry ways, up about 1%. So that one is doing well. But yeah, Cipla, banks, etc., all of them have come off. Before we continue our conversation with Deven Choksey, a quick thought out here on the Nifty Bank and the way it started off. Chandan, Taparia, just the way it started off today, would it leave itself open for a trade?
Yeah, some profit booking could continue. However, HDFC Bank will try its best to again take it on higher side. I'm looking major support for the Bank Nifty near to 26,100, where it may find some buying interest again.
Okay, so not okay. So conversely, would you be trading HDFC Bank on the long side, Chandan?
Yes, positive on HDFC Bank and Kotak Bank. Expecting HDFC Bank to outperform. Trend is continuously positive, making higher tops, higher bottom formation. So HDFC Bank has potential to move towards 2100 levels.
Interesting. Bhavin, Tata Steel in the last couple of days has had a good run in today's session, starting off well. For somebody who had long positions yesterday in Tata Steel, should he continue the long positions despite the markets looking slightly iffy?
Okay, today is going to be the metal day. Basically, many of the metal names are going to declare the numbers, so momentum will be there. We have seen good amount of positivity in Tata Steel after a long time, especially the moment it broke above level of 610. Overall, seems like that stock could be heading closer to level of 650. However, if someone is willing to take a position, he should be keeping a strict stop loss of 610 on the lower side. At the same time, around 650, one needs to monitor the position. If the development continues to remain strong, can continue position even further closer to level of 680.
Okay, so that's what's happening in metal names. The key numbers today, Deven, Hindalco, Tata Steel, JSW Steel. You've obviously looked at this commodity cycle. You've spoken about it so many times. Can the numbers today alter the opinion of investors on the metals, or would you believe by and large the trajectory continues unabated?
So I think on one side, the numbers are likely to be strong. I think for most of the companies, particularly because of the volume has remained extremely positive for all the companies which you have mentioned. In fact, I think the steel companies are confirming that they don't have even a day stock available with them because of the higher demand on which the factories are running currently. So from that perspective, if you see, the situation has not changed, on the contrary it has only improved and it is better only, so which validates the earlier viewpoint about the metal cycle. On the other side, because of the firmness in the crude oil prices and the global market prices firming up along with for the metal commodity, the prices of Indian companies are also moved up, and that should again I think help positively onto the company's realization and along with that the profits. By and large, I think we see the numbers favoring the companies, and probably I think the results should be remaining relatively better. The question is about the valuation at which one wants to buy, whether I think everything is fully priced. As of now, as I like to believe, that I think by and large the companies are factoring the possibility of better price realization and higher volume into the price, and I think the upside in the price probably would remain little limited unless we see the variable like I think price variable changes in favor of the companies going forward. Otherwise, I would think that I think they are adequately priced currently.
Well, okay, that's one. Deven, on would you believe that the near-term market performance could well hinge on what the outcome from Karnataka would be, or would you believe that that's a, I mean, the markets won't bother too much about it? There are other worries like the rupee at 68, oil at 75 or thereabouts, and valuations looking the way they are.
Yes, you said it, Neeraj. I think the larger part of the worry remains on the crude oil prices, the current account deficit situation, the rupee basically taking the flight, and the dollar taking the flight and rupee becoming weak. These are all some of the real challenges which are basically bothering the market. And on the top of it, I think you run a threat that down the line post monsoon, some of the interest rate firming up situation could also happen because the bond yields have started shooting up. So all in all put together, I think you are entering into a situation where the economy is moving in the direction of real challenges as far as I think the cost front is concerned, and that is something which one needs to keep an eye on. Unfortunately, I think the country as a whole, we are all busy fighting and looking at the election and the election results, but the real challenge is that on one side, when the country has such a huge potential because of the projects that it has undertaken, I think the need is to basically keep a focus on some of these variables which are bothering the growth possibilities and the prospects therein. So I guess I think we have to keep an eye on, and particularly company to company where the fundamentals are changing. I think that is a challenge that one will have to field. Probably that is an area which we are keeping our eyes on. As of now, we believe that the situation remains positive. However, I think one will have to remain a little bit more cautious in the given situation when the rupee is weakening and the bond yields are firming up.
Deven, any view on the metal stocks? Most of them did manage to rally yesterday ahead of the numbers. Two crucial numbers out today: Tata Steel and Hindalco. What do you make of them?
Well, as I said earlier, maybe I feel that I think the volume and the value growth will probably support the entire rally that the metal stocks had. And at the same time, I would like to say that the valuations are adequately placed. So whether an upside immediately, answer should not be immediately seen yes. Maybe I think we'll have to wait and see how some of the inorganic growth strategies for companies like Tata Steel gets panned out or played out. I think that is something which one will have to keep an eye on. Whether there would be a significant price revision under the NCLT auction formula for SR Steel assets, I think that could possibly change some of the enterprise value equation for other companies. That will have to be seen. So keep an eye on a relative part of the valuation at this point of time vis-a-vis the valuations coming out of the organic businesses for most of the companies which are adequately priced currently.
You know, PNB is down 9%. Just before I get in a final thought from Deven Choksey, just a quick trading perspective out here because a bunch of these stocks are reacting and reacting very violently. Chandan, Taparia, if you had a short position in PNB yesterday at about 320, you're making about 9% right now. Would you take money off the table or would you believe there could be more weakness here?
Yeah, as of now, it seems that weakness could continue. Better I'll go with trailing stop loss of 81. If it goes over 81, then only I'll cut position. Otherwise, I'll continue and expecting it to go down to us 75, 74 kind of levels.
Wow. Bhavin, say if you had a long position in Indiabulls Real Estate, I know we discussed this stock before the markets opened, but now it's up about 5.5%. If you had a long position, would you let it ride or would you take money off the table?
As of now, I will let it ride. I'm looking out for 210 zone. Closer to that level, probably I would think about booking profits in this particular stock.
Very interesting. Today, Rain Industries is moving a bit higher in trade as well, 238 and counting. So good going for Rain Industries too in the session today. A couple of other stocks have done reasonably okay. The likes of Suven Life, KC International continues to rise and shine. Some fairly decent performance, and that stock too moves up in the session today, as are Indiabulls Real Estate and Godrej Properties amongst others. Deven, you look at balance sheets and cash flows in a meaningful way before you decide your investment ideas. Real estate may not have the best of those both worlds, but are you turning a lot more sanguine towards real estate investments right now? And do companies like Godrej Properties, for example, a slightly differentiated model, does it entice you now?
So on a pure real estate play, I think some of the companies are really looking interesting now, particularly because I think they have the projects to execute and they have visibility for realization of those projects. Unlike in past when they would probably execute those projects in a hope to sell and then realize, here is a situation where the companies would end up taking the projects based on the actual demand calculation or the demand scenario that they have fielded, and on that basis they take these particular projects. Also, the fact is that under the RERA guidelines, they complete the project and then they sell. So, which is also equally important, that there is an equal amount of pressure on the companies to complete the project in time and sell thereafter. So, as a result of which, I think you have a predictability as far as the cycle timing of execution of the project is concerned. We remain positive on the real estate space, but we do believe that I think the upside in the real estate space I think would be always limited and challenging. Largely because the larger companies would have the ability to execute multiple projects at the same time, which would probably generate better amount of revenue for them. But at the same time, it is becoming capital intensive activity for them. On the other side, the smaller and the mid-sized companies would really struggle for the resources that they otherwise require to have in this kind of a situation. So maybe the situation is that I think many of the real estate companies would be in the consolidation mode going forward, and that's the time I think when you will probably see the winners emerging out. Keeping a close eye on it. Of course, we like the models of Godrej Property, we like the model of Oberoi Realty, or even South-based companies like Shobha, We like that those models, but honestly speaking, I think we are not putting money behind these companies as of now. We believe that consolidation would probably force them to look at the business model a little bit more differently than what it is currently.
Interesting. Just looking at how the start has been, and while it is looking very wobbly for the Nifty Bank, we right now steady the first 13 minutes of trade. It's about 0.5% down for the others, and some of and the PSU banks are looking like coming under the hammer. Deven, one final thought really. While PNB is doing what it is doing, this whole recent news flow of some of the bank MDs being asked to stripped of their powers, etc., etc. Allahabad Bank has been at the center of the storm as well, and the stock is reacting duly too. For somebody who's caught with these stocks and you don't know what happens next out here, even if you're sitting on losses, would it be advisable to get out of these names right now while you still have a chance? Or would you believe a bulk of a damage is already done?
No doubt, I think the bulk of the damage is already done, but whether I think it is going to repair the balance sheets of the company in time, and probably I think that's a bigger question. According to me, I see the scenario like this. You have an election coming up in 2019, and post-election, any government who comes in, they will assume the priority to restructure these public sector banks. In the restructuring exercise of public sector banks, few alternatives are available. One, you capitalize them. Two, you sell it off to some of the private sector players who will infuse new funds and they will take over the company after due diligence on the liability side, etc. Three, I think you consolidate them by merging them into each other. In such situation, I think the stronger banks will have to emerge, I think, and the stronger business model will have to emerge to take the merger into the positive territory. Each of these three situations are hopes. Each of these three situations are something which we are wishing for. Whether it will happen in the real time or given time, I am not too sure. So those who are basically wanting to see a couple of years of frustration in their portfolio for the stocks which are not likely to perform, they may continue. But those who want to see better performance of their portfolio, they may have to realize money and put money where the growth is. So certainly I think that's a view coming out, though hard view, but at the same time it's a realistic assessment, as I believe at this point of time on PSBs.
Gentlemen, all of you, many thanks for joining in today and giving us your thoughts. Really appreciate all your times and your calls and your arguments today. Much appreciated. By the way, just before we take that break, just want to mark Hero MotoCorp. It's coming under intense pressure today, down about 4%. That's the top loser on the Nifty today. ICICI Bank to down about 3%, but Hero MotoCorp certainly caught at the wrong end of the stick. Take a break. On the other side of the break, though, we discuss both sides of the Karnataka government formation with Congress spokesperson Salman Soz and BJP spokesperson Sudesh Verma, and get a sense of how markets will react to these political developments with Gaurav Mehta of Ambit Asset Management.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back to Indian Open on Bloomberg Quint. Must have been a restless night for politicians as well as political watchers in Karnataka, as also the rest of the country. But the politicians are back to the drawing board right now, working on the math to convince the governor that they have the numbers. The Congress JDS combined claims they have the strength, and the BJP says the single largest party status gives it the ticket to stake claim to the throne. One thing's for sure, the potboiler is not going to end anytime soon. In fact, if Times Now is to be believed, sources tell them that the BJP is offered the JDS CM post and is ready to give the CM post to JDS. So lots that's happening right now. Let's get two spokespeople from their respective parties to share the perspective. Mr. Sudesh Verma of the BJP and Mr. Salman Soz of the Congress join in. Gentlemen, both of you, very good morning and thanks for taking the time out. Mr. Verma, I'll start off with you. Times Now is saying that the BJP is ready to give the CM post to JDS. Can you confirm or deny whether this is true?
No, I'm not aware of this development. I'm aware that Yediyurappa ji, who is our chief ministerial candidate, projected chief ministerial candidate, had gone to the governor along with senior BJP leaders yesterday and staked claim to form the government by virtue of being the single largest party. And we are very confident that the governor, if goes by constitutional niceties, then definitely will give Mr. Yediyurappa a chance to form the government and prove his majority. And we are very confident that since the mandate was against the Congress, it's an anti-Congress mandate, whether it has gone to JDS or BJP, and people of Karnataka didn't want to bring the Congress back, so Congress should not do anything to subvert the mandate. And there are many people who have their own conscience and they don't want Congress in power. So it should be allowed Congress to sit out and just wait for the development to take place.
Okay, I'll get Mr. Soz to respond to this as well. But, okay, let's leave what the latest development that Times Now is claiming to be out of the window right now because we don't have any confirmation at that. There are two or three things out here, gentlemen, would want both of you to weigh in. Tamanna Inamdar, my colleague yesterday, was reporting that if you go by the Sarkaria Commission and what they have given in the past, that's also a commission formed in 2010. As also probably a 5-judge Supreme Court bench in 2006 case has said that the single largest party should be given the first chance if there is no pre-poll alliance in place to stake claim. That is part one. Part two of this puzzle is that in the previous two state elections that's happened, the single largest party hasn't got the chance to do that. Mr. Verma, I'll first want you to weigh in. While constitutionally, and you may be right if you look at what the Sarkaria Commission or the 2010 Commission mentioned, and you may be right in that count, but the BJP in the past two state elections has not gone ahead in the same vein as well. Why is it that the stakes in or the ruling in Karnataka should be different?
You see, it is for the governor office to reply to your question. We cannot reply on behalf of the governor because we are a party to that. But let me tell you, if we try to understand the Goa example, about which you are citing, then Goa, the Congress had not even made the claim to form the government. And even if you become the single largest party, unless you stake claim, how would the governor know that you are actually interested in forming the government? You have to show interest. The Congress was caught napping and all the other parties joined the BJP and then we staked the claim. We were the first party to stake claim and we formed the government. So Congress expects that governor invite them. You have to stake claim. This is what Yediyurappa ji has done, the first thing.
Mr. Soz, you want to respond to this? I can take in the argument that the JDS Congress combine has gone out and said that they have the largest numbers. But if the previous commission's orders, as also as I said, the 2006 case, which the 5-judge Supreme Court bench had mentioned, is to be believed, there is a case being made. If there is no pre-poll alliance, the largest party should get the chance to stake claim first.
Well, yes, that is what we argued in Goa, in Manipur, in Meghalaya, and all this. The BJP people are spreading this whole thing about how the Congress party did not lay a claim, and how would the governor know if the Congress party wants to form the government? But the mandate in Goa, especially, was decidedly against the BJP. They were brought down to 12 seats. We were 3 seats short of the mandate of a majority. The Goa incumbent chief minister was defeated. What other mandate do you want? Now, Mr. Arun Jaitley at that time also said that a post-poll formation. The governor has the discretion to invite the post-poll formation if they have the numbers. In this particular case, we have the numbers. Now, the governor cannot just divine somehow that the BJP is going to have a majority. On what basis would the BJP have a majority? BJP has 104 seats, actually 103 because one seat is in dispute. Congress party has 78, JDS has 38, that is 116. As far as I know, there's a BSP candidate who is with us. There's another independent candidate who's with us. So what I don't understand is what reasonable person in this country could say that the BJP has the majority and has the possibility of forming a government unless the BJP with its vast resources, with Amit Shah and Narendra Modi and all these guys, they can engineer defections. Yeah, and if that is what people want, that's fine. They can do that. We can't obviously stop them if they engineer defections, but I think the people of the country will take notice.
Yeah, they will, and I'm sure Mr. Verma wants to respond. But Mr. Soos, the argument is not about whether the BJP is claiming that they have the majority or no. The argument, and the question that I'm throwing out here is that if indeed, if you go by the constitution and what's happened or what should have happened as per the commission reports, then in the absence of a pre-poll alliance, the largest party should get a chance. And Mr. Verma, I'll come to you, but Mr. Soos, you want to respond to that question first before I go to Mr. Verma?
No, I'm sorry. No, Neeraj, I think this has not been consistently followed because I'm giving you three recent examples where in Goa, Manipur and Meghalaya, this was not followed. And the reason was that the governor was maybe somehow convinced, I don't know how, that the BJP should be asked to come in, even though they were not the single largest party, even though they had lost the elections badly. In Meghalaya, they had 2 seats. In Manipur, they were way behind us. So now if the BJP suddenly kind of says, oh, we're the single largest party, that means the message to the opposition is, heads I win, tails you lose. And that is not democracy. That is subversion of democracy. Every Indian can understand that. This is not complicated. This is not rocket science. No matter what Mr. Verma says, no matter what the Prime Minister says. The Prime Minister said yesterday that we should uphold constitutional norms. If you look at the legality of this, there is no reason for the governor not to invite us. Just like governors in other states like Goa, Manipur and Meghalaya invited the BJP.
Yeah, I'm sure the governor will take into account or take opinion from the Attorney General. But Mr. Verma, you want to respond to this?
Yes, you see, there is an institution called court. If something wrong happened in Goa and Manipur, then the Congress would have got relief. This is something which the governor's decision has been vindicated. So let's not try to question. Every situation is a different situation. If you want to talk about Manipur, then there is already a NEDA that exists. Northeast Democratic Alliance exists there, and all the partners together. When it came with BJP, it got larger number than what the Congress had, and Congress actually twice there was chief minister. Was third term, and the numbers came down from 42.
No.
Please hold on. The number came from 42 to 28. So
Mr. Verma finish his point, please. Yeah, Mr. Verma, finish your point.
Now the situation is. Now the situation is there have been presidencies of both kinds. There have been presidencies of both kinds. It's not that one kind is there, other kind is not there. And you remember Atal Bihari Vajpayee's government, we did not have the majority that time, but still because BJP was the single largest party, Atal Bihari Vajpayee was brought in and sworn in as Prime Minister. He resigned after 13 days because no party actually supported. But he was able to communicate because this was a vote for change. And Vajpayee actually thought that maybe there would be some party whose conscience will break, some MPs whose conscience will break, and they might end up supporting the government, because it's not the majority that is important, it is majority on the floor of the House. And Mr. Narasimha Rao ran a minority government, you must remember it. So what happens on the floor of the assembly is very important, and we strongly feel that since it is a vote for Karnataka, JDS spoke about Karnataka and termed Siddaramaiah as the most corrupt chief minister the state ever had, and JDS also criticized the Congress on many fronts. So if it is in the benefit of Karnataka, the vote has been given. You cannot turn into an anti-BJP mandate.
No, Mr. Verma, so I take on board the point. The question mark obviously is what happens next. And Mr. Soos, I think one point that Mr. Verma makes to an extent correctly is that if I was listening to a lot of your party experts, some legal experts on journal news channels last night talking about that if indeed the governor were to invite the BJP, the Congress will take this matter to the Supreme Court. And some people believe that Supreme Court verdict would be final there. Mr. Verma makes this point that if indeed that were to be the case, there's nothing that stops the Congress from going to the court. And if the Congress is saying that the BJP subvented the moves and formed the government in the previous 3 states, nothing stopped the Congress party from going to the court if they believed that it was not followed in spirit and legality.
Listen, basically, what Mr. Verma and the BJP want is a former RSS man to do their bidding. But remember, the governors of states report to the President of India, and the President of India is an apolitical person. At this stage, the President has to see what happened in some cases. Please, if Mr. Verma is so interested in numbers, the JDS leadership and the Congress leadership have decided to form a government together. We have the numbers. Everybody in India knows that we have the numbers. On what basis should the BJP invited? On what basis should they be invited? Why? I don't understand. What is the need for going to the Supreme Court when we have the numbers? When people choose MLAs, MLAs decide on the government. There are 116 MLAs from 2 parties saying that we're going to form the government. These people talk about, oh no, we should be given a chance. Why? On what basis? Now, he talks about a mandate. Of course, BJP has received a great share of the seats. Congratulations to them. But, when you look at how the votes have been polled, since 1999, this is the highest vote share that Congress has received. In fact, this is not anti-incumbency. This is actually pro-incumbency. It's unfortunate that the way the system works, some seats concentrated for the BJP have gone to them. Otherwise, the vote share for the Congress is the highest, much more than the BJP, is the highest since 1999. Actually, Congress has improved its vote share. So the mandate is not really, in that sense, against the Congress party. The Congress party and the JDS together have 3/5 of the vote share. They have more than well above the 50% mark in seats. The governor should invite us. If the governor does not, the president should intervene. If the president does not, the Supreme Court will have to go to the Supreme Court. Okay. But in all of this, I think people of the country realize that the BJP will do anything to grab power, anything, and that is what they're doing in Karnataka.
Okay, fair. Before I ask my final question to Mr. Soos, Mr. Verma has to make a point. So that point, and then one final question to Mr. Soos. Mr. Verma, your point, please.
You see, this is not correct to say, this is not correct to question the office of the governor, irrespective of the ideology he belonged to. Once you become governor, then all ideologies apart, you go by the constitution. And that is why we should not cast aspersion on the office of the governor even before a decision is taken or even after the decision is taken. You have the court to, address the issue if something wrong has happened. It has happened earlier also. We would just expect the Congress not to get so excited. They must understand that the mandate is against them. The mandate is for BJP and for the JDS. They must understand this. BJP has been off the mark only by, say, 6 seats. And a party that is just off the mark by 6 seats, you are saying it does not have the mandate, and you have lost close to 44 seats from what you were, and you are saying that the mandate is in your favor. Don't try to subvert the mandate, because people of Karnataka would not like this.
Gentlemen, I would just want to intervene out here.
There are many people who have voted because they were angry with the Congress non-performance.
Gentlemen, I would want to intervene out here. Gentlemen, I would want to intervene out here, and the reason I'm saying I want to intervene out here is because these conversations about what nature of the mandate have been consummated ad nauseum yesterday. So I just don't want to get into that. I just have one final question really on this debate. The whole idea of this conversation was to figure out what could be the best way forward for the people of Karnataka and for people in the markets to know what the eventual outcome would be. So the 2 or 3 outcomes that are there, we've kind of discussed them. I just have one final question. I know I mentioned that since we don't have any confirmation of what Times Now just spoke about 20 minutes ago, about the BJP offering HDS the CM's post, I won't talk about that, but I'm forced to bring that out in my final question to Mr. Soos. Mr. Soos, if that were to happen, that the BJP offers the CM post to JDS the same way that Congress did yesterday, what happens then? What if JDS believes that it's a better proposition for them?
look, JDS is an independent party. They're free to do what they want. But if they take lessons from what is happening elsewhere in the country, they'll realize that the BJP has no interest in propping up JDS for the long term. They're going to finish them off. They're going to finish off Nitish Kumar. They've basically opposed Chandrababu Naidu. They're going after all their allies. They're not interested in their allies. They're interested in power. BJP's single purpose is to amass as much power as they want.
Mr. Soos, my question is not really about what the BJP will do to the partners. My question is about what the Congress will do if such a thing were to happen.
Well, look, the JDS is an independent party. If they feel that they're better off with the BJP, which I can't imagine because it's supposed to be Janata Dal secular. If they're going to ally with this totally communal, totally divisive party, then they're going to suffer the same fate that the PDP is suffering in Kashmir. PDP is now the extremely unpopular in Kashmir, and by the way, BJP is extremely unpopular in Jammu. So I think what will happen to JDS is basically
I take a strong exception. BJP is a democratic party, a secular party. Runs by the Constitution of India.
Please do not interrupt, Mr. Verma. Mr. Verma, please do not interrupt. This is not appropriate. I did not interrupt you.
Using the wrong
my point is that JDS has to view. JDS has to view. JDS has to view basically. Mr. Verma, please do not interrupt by shouting. You're not going to make a difference to the people of this country. You have
30 more seconds to this.
You use the wrong word for my party, so I have to come and intervene.
Yes,
I do not use that word. If you are within civilized limit, I have no problem.
Everybody knows you have no respect for freedom fighters.
No, I really appreciate the sentiments flowing out here, but we'll keep the opinions about each other's party on the sidelines for now. Gentlemen, please allow me to interrupt. We're just running very short of time here, but as I said, the whole purpose of this interaction was to try and figure out what the course ahead would be, because while you guys were busy looking at the vote share, etc., what the equity markets did yesterday was very, very interesting. It gyrated very, very strongly to the leads as they were coming in, which is why this discussion and the way ahead was very, very important. Thank you so much, both of you, for taking the time out, and really appreciate your time this morning.
Thank you.
Thank you.
All right, that's the viewpoint from two spokespeople, one from the Congress and one from the BJP. You can never get a final outcome to these debates, can you? But what we can do is try and figure out what the markets will do in the aftermath, if you can, of what will happen in the state of Karnataka. It's keeping the markets on tenterhooks for sure. Thought it best to get in Gaurav Mehta of Ambit to try and figure out how would he approach a scenario like this. He keeps an equal eye on politics and the impact on the markets as well. Gaurav, good having you. Thanks so much for joining in. By the way, uncertainty galore. Times Now just 20-25 minutes ago said that even the BJP might be open to giving the CM's post to JDS. Let's work with an assumption that's not happened for now. There's still a bit of uncertainty as to what will happen going ahead. What would you be doing in a scenario like this from an equity watcher's perspective?
All right. So, I mean, clearly, these political outcomes we have seen in the past are important in the near term, and they do impact the course of the markets over short periods of time. They do induce a bit of volatility. But I think, on this specific piece, I think to the extent that these state elections were being used as a tool to extrapolate what might happen in the central elections next year, I think the results that came out yesterday should be positive for markets overall. I think the specifics of who forms the government and in what shape and form does that government take charge should be less relevant overall from the market's direction point of view, because what the market indeed was looking for was whether BJP still can be the single largest party, whether those numbers will stack up, and whether in 2019 you will see a continuity with respect to political guard. And on that piece specifically, I think yesterday's numbers were positive. I think what you're seeing in the markets today is a bit of volatility, which anyways was continuing in broader markets over the last 2 weeks or so. So after the sharp fall in the first 2 months, Jan, Feb, March, for the first 3 months, in fact, Jan, Feb, March, April was an uptick, but May so far for the broader markets has been a down month anyways. The Nifty was
was optically showing you something else. But whether you look at mid caps, whether you look at small caps, they were anyways coming off. So I think the large caps are now just about participating in the pain that the broader markets were anyways witnessing. So, but overall, I think this will be a short-lived phenomenon. The economy is picking up, the earnings are looking up. So I think market should eventually found a footing somewhere, maybe a couple of percentage points lower from here, and start resuming its up move.
Interesting. We are down about 1% today, Gaurav. You would believe that in large portion it could well be due to what's happening in the global markets as well, or would you reckon that it's political uncertainty that is driving this confusion right now?
So I think it's largely driven by the fact that market internals are anyways weakening, which is what I said, the breadth was narrow, broader markets were anyways suffering. The Nifty was showing you an optical sort of illusion that the markets are all right, but that wasn't the case. So I think the large caps are now participating in what the mid caps and small caps are anyways doing. And obviously global cues over the last couple of days haven't been supported. So I think that's also playing to what the Nifty action today is showing. But I think with respect to political outcome, I think again my point stays that to the extent that these were being used to extrapolate what will happen in 2019, I think the outcome is supportive. I think the specifics of who forms the government should not matter much. Who forms the government in Karnataka should not matter much to decide the future course for broader markets.
Gaurav, we'll keep it short because this is linked to the political outcomes, etc. The last few days, the broader end of the market has completely collapsed, so to say. I mean, this month, if the indices are down about 5% while the index is trading at 10,800, it shows the weakness there. Would you attribute that also in part to uncertainty that would have crept up in the run-up to the elections, and post this uncertainty getting over, whether it gets over today, whether it gets over the next 10 days, would you believe that the course correction in mid-caps could well be coming to an end? Or because of the brittle nature of the macro, which is the rupee doing what it is doing, oil prices doing what they are doing, IIP, trade deficits, etc., 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 we could well see some weakness persisting at the mid-cap and the small-cap end of the market?
Right. So I agree with you that the weakness that you've seen in mid and small caps, it can partly be attributed to political uncertainty going into the event. Partly it could be because of the fact that you are seeing that mutual fund realignment where people are sort of realigning to new definitions on large caps, mid caps, and small caps. So that obviously puts a bit of brunt on mid and small caps given the lack of liquidity there. But broadly, I would also concur with your point that we think that we are nearing an end to this mid and small cap correction. We don't think that this is going to be as nasty as the down move in Feb or March. We think this is more, after the sharp uptick of April, people are using it to book a bit of profits. But I think on your point on macro, yes, macro is deteriorating at the margin, but the heartening point is that the micro is improving. So whether you look at economic data prints like IIP, like commercial vehicle sales, like SME credit uptake, or for that matter, whether you look at the GST collections in the month of April, which suggests that there is, a strong compliance to GST now, which in turn means that, the entire shift from unorganized to organized that we've all been talking about is now materializing. So all of that will mean that corporate earnings will look up from here on, and as corporate earnings do pick up, mid and small caps will disproportionately benefit. So from a longer term investor's point of view, we think that this is a great time to be accumulating good quality mid and small cap stocks.
Okay, that's what I wanted this interaction for. Gaurav Mehta, thanks for putting that into perspective. Out of time completely on the show, but thanks for joining in today and giving us your thoughts. Really appreciate. The markets, though, looking very, very weak. About 1% lower. The Nifty Bank 1.25% lower. So there's a sea of red out there. And mind you, it's not all because of banks. Stocks like Hero MotoCorp and a couple of others are also feeling the pinch today and are trading substantially lower. But it's a wrap on this leg of Indian Open. Up next is the F&O Show.